This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monty Moore with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and my mortgage team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com. That's questions@talkmusiccity.com.
Monty.
Hey, Carey Ann.
Hello,
hey, Jason
hello.
Hoover.
Jason.
Welcome back. Welcome back.
Thank you.
We got an exciting topic today that I know I'm looking forward to. You know, Carey Ann, every single time, and I've been in your presence when you're teaching, I don't know how many times, but every single time I feel confident that I am worth more to the planet than I was before before that meeting. Seriously. I mean, so let's talk. This is July 2022. The market has shifted in the last month or so.
Yeah, we're past mid-year. Isn't it
past
crazy?
Mid-year. I can't even believe that. And so, you know, you're amazing professional. I guess you're number one in the universe. I mean, what is your what is your category? I mean, you're number one in this country, right?
Well, we're really blessed to be for purchase units last year, which was a really big year, to be number 3 in the nation. So my team, my personal team, and I. So
number 3. What happened? Number 2.
That's
2?
Okay. You know, top 5. You know, I think that's we worked really hard last year, and I think that's a huge win for female. You know, to be a female in this industry, which is heavily, you know, with the gentleman leading the force there. I think that's a big win for us. But you're right. I mean, this is, you know, mid-year. The world is kind of shifting. You know, for us lenders, cash was so king for so long, and I was like, why don't you like me?
But did what you did with this huge paradigm shift where, you know, I could count on maybe one hand until, you know, a few years ago, not in one hand, but you know, in my experience, maybe 1 out of 100 was a cash deal.
Well, I don't think anybody knew how to spell cash for years until just recently. In my opinion, I mean, when we would take applications, it was we kind of skated around the asset section because you didn't want to make anybody feel uncomfortable.
Right.
You know, is your checking account money in, money out for bills? You know, like to ask how much money is in your checking account was just an awkward question to ask. But you know, and it's a blessing for so many people to have cash to be able to do what they've done, right? And I've been reaching out to all the folks and say, hey, put me in, coach. I'm ready. You know, I'm ready to get back in and show them what we've got. You know, and financing is still very strong. You know, rates, this, that, we talk about it. That doesn't really matter. It's everybody needs a home, right? There's still a huge benefit in being a homeowner. And I am just so blessed to be in an industry that I truly love. I create solutions to, you know, problems each and every day. And there's a new one that brings me goosebumps. You know, I just truly love what I get to do. And then I love to educate the real estate agent. You know, Jason and I, we talk, you know, there's so many newbies that get in the industry and they already want to be over here, right? They don't want to go, they don't want to walk. They just want to jump already, you know, over there. And so, you know, bringing knowledge to real estate agents and our community with all the things, I mean, to see their eyes open every time I teach a class is kind of a cool thing. And in our industry, we learn something new each and every day, right? The guidelines change on a regular basis.
It's a moving target.
Yeah. Who we couldn't help yesterday, we can help today, you know, and it's just a blessing to be in our industry, I think.
So, what are some of the most recent changes that you have encouraged? I know that every Monday morning when we have our huddle call and you come on and share some nuggets, there's always little changes that you're making, that your company is making, that you're making, that you're embracing different ideas. I mean, one of them was, I know that you talked about buying a rate down instead of being stuck with whatever the prevailing rate is, because some people, you know, over the years that we worked together, I've never heard you fixated about rate. I never knew what the interest rate was because I just knew that I could send things to you and, you know, get the job done regardless of rate. Of course, it wasn't like it has been recently, but still, you're fixated on rate. You're teaching people how to get around, get qualified for what they're qualified for. So let's talk about that.
Yeah, I think how I look at it is, as a real estate agent, when you talk to somebody and they're excited about purchasing a home, you want to help them purchase that home.
Oh, yes.
But you don't know the story behind, right?
Right.
The cover right there. So, what I teach real estate agents is everybody's got a story. My job is to be able to complement that story with the right mortgage program and making sure that I have enough options. So it is not that you have to stress that you're calling Joe and Sue and Steve and Michael and then Carey Ann, right? Mm-hmm. Meaning you have one place to know that all the knowledge, all the mortgage offerings are there to really get you feeling confident. And then we talk about selling with confidence, right? That's what you want to do as a professional. You want to be able to truly sell with confidence. There's so many, and I'm grateful for every opportunity that crosses my desk because my kid's still 9 and I love all loans. But there's so many that cross my desk. And
What's your kid being 9? How to do that? Do you just have to feed her? Is that true?
She's got to be fed, yes. Okay. And she wants clothes, and we're going to move into
she
all
wants clothing. She's over there going approved.
All the
Disneyland
things,
approved.
Yeah, all the things that eventually come with preteen and then a teen and all the things, right? And she,
been there.
I kind of giggled the other day. She saw the bank account, the mail came in, right? And she saw her name on it. She's like, "What is this?" And I was like, "That is your college fund. Mama's got to save for later on how it all works." But just kind of thinking about, if I was a real estate agent and you thought what someone told you to be true, right? And then it started buckling. The system started buckling. Mm-hmm. That's a lot of pressure on you, which means what do? You stop talking and thinking about the next opportunity, right? You're so focused and laser focused on this opportunity just to fix it, right? And so thinking about being in a business, working with those true professionals that they should be giving you confident, advice and or solutions to every problem, and I hate to say that mortgages are problems, but there is a puzzle. I mean, and you've got to put that puzzle, all the puzzle pieces together. Yes, there's income, there's assets, and there's credit, but everybody's income, assets, and credit are all different. Everybody's, scenario is a little bit different. Over the last 2 years, if you think about it, we all look at the last 2 years of someone's life.
Right.
The last 2 years have been a little crazy for some, right? Up, down, left, right, got back because of the COVID situation. And so depending on the scenario, and let's say they're making lots of money now, they're ready, they're excited. They tell you, I am ready. I've got so much money. Life is good. My family is excited to purchase real estate. And so you're like, yes, let's do it. And then find out that they didn't do anything the previous year. Yeah. Right. And so life is, it's very hard to get the financing piece, right? So just kind of thinking through that. But when you reference about the tools with interest rates, right? Changing the narrative, getting away from rate, talking more about comfort and affordability, right? And we talked with TJ a lot about that over the last couple of weeks as well. And so I think it's really important to back into the client's comfort, right? I think you and I would position people in a really bad place, and we set them up to fail if we just get them approved for a loan and you just find them a house and we don't talk about their comfort level, because the computer systems don't think about all of the other things. Gasoline, right?
Baby formula.
Yeah, we've got a new family. The diapers. I remember what formula cost. If you can't breastfeed, that's costly, right? And all the things. And so you want to think about that. So we really try to approach the conversation with the client about, what are you comfortable paying every month? And let's just say that they do afford and they can qualify for blank interest rate. Well, it may make sense for me to talk about a buy down. It may make sense for me to talk about what we call with my team a step program, where we step them into what today's interest rate is, right? And that might be 1% or 2% less, depending upon where we think it's best for them. Now, we had one client who was comfortable at $2,600. They were working with a lender, new construction, and that lender did not lock them in for a reason, right? And so rates just shifted. And I will tell you about the market. Friday afternoon, I shut it down, and I wake up Monday and literally the interest rates moved 1.5 points. I mean, I cried. I literally was like, what? And I cried for all of the clients who were thinking about doing something, right? And what's great about what we've created at my mortgage team is all of these tools that protect you whether you look at this or look at that, meaning you can lock in your interest rate today, and if the market shifts, we can float you down to the lower price. You're protected across the board if you're in the market to do something within a 90-day period. And if you
That's a huge deal.
It is. And if you are that client who has the newborn, well, your budget will shift 12 months from now, 2 months from now, 2 years from now. And so why don't we position you in a way where we can save you a little extra money for all those necessary items that you need to maybe purchase along the way, and then move you into a different position, 12 months and or 24 months. Now there's a cost associated with that, and we'll show you this option or that option. And, we have some real estate agents that are contributing, some builders that are contributing, you as the buyer can contribute and the lender as well. So there's ways to kind of come together.
So you're saying the agent can contribute as well?
Yeah. And so, really thinking about being creative.
The seller, I guess?
You can use your commission towards contributing towards, cost and helping to buy interest rates down. Mm-hmm.
Okay. So this is interesting. Can we delve in that just a second?
Yeah.
Because this is something I'm not sure I'm clear on. Is that governed then? It has to come through the seller, doesn't it, or not?
Nope.
It can just go directly to the agent?
you may talk through with your own broker, and you guys as well, what makes the most sense, and probably your CPA on how it all works.
We don't care as long as it's legal and ethical and so forth, but I just want to make sure that are they going to be capped by what the seller can only contribute up to 3% or 6%?
Yeah, so depending upon the type of loan that you do, the seller concessions, which I love that we're talking about seller concessions because those weren't in a conversation for a really long time, right?
Yeah.
So that's kind of a cool thing. So on the VA loans, with which we love our vets, that's 4% the seller can pay. And what's super cool about a VA loan is the seller can also pay 4% of the vet's debts. So not only closing costs, but if you wanted to roll in and keep the price the same, you can roll in the remaining balance of their car loan and or credit card A, B, and C up to 4%. So you can position the vet in a really good
So does
organization
the house
way.
have to appraise for that additional 4% or no?
It has to be in the purchase price,
Yeah.
right? Mm-hmm. Everything has to appraise. But with the market shifting, maybe people want to maintain purchase prices, right? They want to keep the purchase price the same, but they're willing to give a little extra love. That might be something you can do on the VA
Like
loan.
a normal market.
Yeah. Hey, welcome
back
back
in the
to
day,
normalcy, right? On a conventional loan, depending upon the loan to value, we usually say 3%. That's a good number to work off of. And all of these are the percentage plus title. So we never really were talking about that for a period of time. But in your contract, there's a section where who's paying title. If you put that with the seller, seller can pay title plus the percentage that we were talking about today. Now, on an investment loan, seller can only contribute 2%. So that's not a Carey Ann thing. That's across the board. So the sellers can only on an investment property only pay 2%. And then FHA again is between 3 and 6% depending, and that's towards cost, right? And so let's say that they're contributing money
3 and
towards
6%. That's a big difference.
Well, it's depending upon the loan to value, it shifts. Now, closing costs should never be that much money, right? But again, sometimes adding on interest rates, buying down points and things, sometimes that can increase a little bit compared to your normal, 3% closing cost to include your escrows. But you, as the real estate agent, can contribute a little money towards this or that, right? You can do a broker credit. Now, again, from a tax standpoint, you probably want to visit with a CPA. If the money goes to, RG and then RG pays it back and it credits this and that. I don't know how it all works, but sometimes they, just put that towards less in the commission and the seller paid the closing costs.
If it's
right?
a broker credit and the lender is okay with it, then the broker's not receiving it, nor is the agent. So it's not about concerned about that.
Okay, even better.
As long as the lender's happy about it, I think that's the big deal.
Yeah, and we have many folks that are willing to be creative on different options. And again, everybody's story is different. One person needs closing costs. One person wants a lower interest rate, right? One person needs that or this to just feel comfortable with what they've got. So just think about
I'm
as
sorry
you approach.
for interrupting you, but how much can the realtor contribute to that purchase? Is it 1%, 3%? What's that?
They can give all of their costs.
Their whole commission.
Yeah.
What if they collected a 6% commission? Could they give half of that?
They can contribute. Yeah,
okay.
I don't
I'm
think
just getting creative here a little bit.
Yeah, I don't think there's an issue with that on any concern. I don't think on how that works. You're focusing on now again the shifting of what you do.
So we could actually buy down an interest rate then. For that 3%.
Right. If you're a listing agent, I've got some listing agents that are already thinking 2 steps ahead with their sellers, saying I'm willing to give blank dollar figure whether that's cost or buy down. Some people are using terminologies and things that have said, hey, you can buy this house for this payment. It's a little hard to say with the market being, and I don't know if that's even approvable from a broker standpoint. I don't know how well that works. But
as long as you're disclosing what the variables are, I think everything's fine. You just got to make sure that you're covering, okay, this is dependent upon this particular interest rate, which is available today at this date or whatever. I mean, as long as you're disclosing and not bait and switch, I think it's fine.
Yeah, and I also think, clients don't know what rate really means. They're wanting to know what their payment is, right? And so if you already come prepared with renters, they're renting between $1,500 and $2,000. Well, what does that convert to right now in today's market for purchase price? You as a real estate agent should know that, right? I think that's important because you're able to already say, well, if you're comfortable at $1,500 to $2,000, you can purchase a home between blank and blank, right? If all everything else works out.
Savings,
if everything works out. And then if we're able to inch that up a couple $100, what else can they purchase from a comfort standpoint? So the tools, I think, is really key right now, knowing that you as a real estate agent want to help everybody that you talk to. Now, I will tell you that going back to being the professional, and I love that. I actually stole it in my class. I referenced your name in one of my last classes because I love using that because that really makes a huge difference, right? Being a true professional is somebody that pauses and runs their business like a business, which means you ask all the right questions. Like you should ask all the right questions. I'm surprised more real estate agents, now maybe because I have a reputation that I know what I'm doing, but if you're talking to somebody that you've never known, you should ask the questions. Now you might ask questions that I legally can't answer for you because of the Privacy Act, but you can ask yes or no questions. And you know what you're going to do there? You're going to say, if I'm the lender that may not be as seasoned, I'm going to be like, well, Jason, he knows the stuff. I better be on my toes, my tippy toes, right?
You're going to bring your A game to the party.
And or you're going to hear out of the lender's voice confidence, or they're going to, trip over their words, and then you're going to say, should I be a little worried about that, right? And ask a few more questions.
No matter what business you're in, confidence sells.
Yeah, absolutely.
All day long.
And your word and honoring your word, I think is key on that. You're the listing agent, you accepted a government loan, and you know what? That's going to happen now, and I'm really excited about that because government loans are a good thing for certain clients. But you are a listing agent and you accept a government loan, whether that's USDA, whether that's FHA, or that is THDA and or VA, right? You accept it. Do you just accept it and then you see a pre-approval letter? You know what a pre-approval letter means, right? Really, I mean, they've pulled credits and they've sent in a pay stub, but does that mean an underwriter's seen it, right? And so working towards getting an underwriter or asking the questions, did you run this? Did you run this? Are you required to have this? These yes or no questions will, if nothing else, remind them to do it. Because I'm seeing more loans cross my desk because of blank and blank and blank that were never done on the front end, and now they're done on the end, and now the deal's dead, and it's really hard to do. The other thing I will share with you too is lender A says that this loan cannot go, you're working with the buyer, this loan cannot go blank. And let's say USDA, we just recently had this situation. The client does not approve USDA and they're so close, but they're not approved. Well, you don't 100% know this lender, right? You may, and just like we can look you up, you can look me up. You can see how long I've been in the business. You can see my track record. You can see all the things. And we can find that information too, right? So we know how many, sales you've had, et cetera. And so with that, you ask me more questions, right? So and then I go, well, you talk to another lender and said, well, let's just look at it. And we did that just recently. And this client they're clear to close today, and they saved $450 on their monthly mortgage payment.
Wow.
Just by getting a second set of eyes and double checking it. We had someone say they were denied THDA. THDA means what? First time home buyer, right? That possibly they need 100% financing. Well, you and I want to set everybody up for success. 100% financing should not mean that they have zero money in the bank and they are now buying a house. At the end of the day, it's going to cost money to own a home, right? So even though the guidelines don't require it, I like to make sure you have some money in the bank, right? Because what if this happens or that happens, even though I'm not collecting it? And we have to educate them on what is called reserves and why I think it's important, and let me educate you on that importance level. Well, this lender denied a THDA loan. Well, if you heard the loan was denied THDA, you would think that THDA denied them, right? And so they come to us, and we look at it and go, well, this meets THDA's guidelines. Did they really get denied THDA? And we go through all the ringamaroo. Now, keep in mind, they were younger, 23, so had no credit scores. They haven't yet, established themselves, but they still have a rental and they still have a utility bill, and they all have all the things. So we built up their credit report, and they had 401k, they had the money, all the things, and we got that approved. Again,
what do you mean you built up their credit report?
So when you have someone with no credit scores, you can use alternate credit to help.
Like utilities.
Yes, and build that up. Gym membership, I used to say Blockbuster. Can't say that anymore. But gym membership, utilities, you can use gaming. I mean, you can use all the things that you have a credit card or something, not a credit card, but you pay money for that particular monthly for that service. Cell phone, car insurance, home insurance, not home insurance, but, insurance, things like that. So, so that's what we did. And again, somebody said no, we say yes.
Carey Ann, I got a hard question for you.
Love hard questions.
I want to put you on the spot.
No whammies. No whammies.
I'm going to put you on the spot here.
All right.
Okay, it's not a mystery by now with a lot of people here and a lot of realtors here in Middle Tennessee that you have been, the go-to person when it comes to rescue. Okay?
Sure.
I mean, you got that reputation. To be honest with you, when we first met and you started going down that path, I thought, she's going to be known as the garbage girl or something like that, where you're dealing just the tough loans, okay?
Garbage girl.
Well, what I'm talking about are the tough deals, okay?
I'm just joking, yeah.
Because a lot of times when somebody...
Clutter ain't cute, though.
a lot of times when somebody gets a reputation of doing the hard ones,
sure.
Then what do they get? They get the hard ones, and that's not really what you're wanting to build your business on, I assume. But maybe it is because it feels like it is. But my point is with the reputation that you've got of taking things from the fire and breathing life into them and then getting them to, like this one you just said, saved, $450 a month. And the backstory on that couple, that was a big deal.
So big.
It wasn't about the money you made on that, if you made anything. It was about making a difference in people's lives, which we those of us that are really committed to this industry are committed to. But anyhow, my point is, quick example. There used to be an agent here in this company for a while. This has been a while back, and he told me one day, he goes, "Well, my deals that fall apart, I give to Carey Ann." Mm-hmm. And I said, I said because he said, this other lender that he deals with has this awesome basement and this incredible TV, and he has them over for chicken wings and whatever, on Saturday. And,
sure.
And so they're buddies, and that's why he gives them that business. I said, it bothers me from the standpoint of why would you jeopardize your reputation with the clients that have put their trust in you by giving them to somebody there's only maybe a 70% chance he'll be able to get them to the finish line, and then have to give them to Carey Ann to rescue them. Why wouldn't you just go ahead and give them to Carey Ann and save the rescue, save the drama, and build the reputation? So my question is, I know it's a long ways around to it, but my question is, that's got to be tough, or my observation, I guess, is it's got to be tough to know what you do for people and get that word out there, and people still use lenders where they know that the odds are maybe 50-50 they're going to get them to the finish line. Is it because you represent such a solid fallback position? How does that make you feel? Well, I'm just being real here, okay?
I love the
question. Is that a hard question?
I love the question. So, we help. We've got great loyalty. So there's a lot of people that we work with on a regular basis.
To be number 3 in the universe, I guess you'd have to. So
just even on a down market, the team did $27 million last month. There's, 4 folks that I have within my team. And we, I think, helped 70 families. Wow. And so we may save 15, but there are so many more that we help. Mm-hmm. And so for me to say, just because you sent me, this loan, and I know you work with so-and-so, and why don't you, it goes back to professionalism, right? Are they true professionals within their own industry? Possibly not, but I'm very grateful for every opportunity. I'm running a business, and if I can help a family, it's not about, we do business associated with humans. Like there's a moving truck, if I can do something to help that person, I definitely want to do that. But yeah, I mean, I had another girlfriend call me and say the same thing. You always say you're saving deals. We need them to, you do all my deals, and you do them great, from whether it's, from the start, and absolutely we love that as well. But I would be naive to not share stories on how we're able to, continue to grow our business and help the community here. I
know, our business yours is extremely competitive as well.
Yeah.
When things we're going good, then everybody jumps in. I imagine you had the same thing happen with the mortgage business as had in the real estate business.
And I just say, I've been 20 years consistent, and every year continue to grow, and I will be here when you have your minor midlife crisis and go down the street with, lender A or lender B. But again, people who choose lenders or choose home warranty or choose insurance or choose inspectors just because they bought you this or they, the shiny object that's not how I choose to, associate myself with the partners that I work with. It is a true partnership, and again, I think we helped last year 400 real estate agents, one unit from 400 real estate agent, which probably means I saved 400 deals last year. And look, that's amazing, right? That allowed us to hit some goals to help more families. And so I would never be negative on that. No, were my feelings hurt?
I'm not talking about negative. I just wanted to,
were my feelings hurt back in the day? Absolutely. You do all the things, and they come and they get all the knowledge, and then they go, down the street. It's their choice, and
the reason for bringing this up, thank you for your answer, is it requires that kind of mental toughness, doesn't it, Jason? We have in our business and your business, you've got to be mentally tough. You've got the goods. It's amazing where some folks get the opportunity. Just recently, because I was honest with one of my past clients, I said, look, when we started talking about you selling your home, there was only 2 homes on the market that you'd be competing with, and you could get a maximum dollar. Now, 30 days later, there's 13 homes in that market. I said, since you really don't care if you move or not, I'd probably put that on pause and just kind of see how things maybe shake out, rather than go through the hassle. He took that as me not wanting it or being too busy, to help him.
Sure.
And he went out and hired somebody who's only closed 3 transactions in their whole life because she's a go-getter. Now, God bless all the go-getters out there, all the newer agents. I'm not saying anything critical about that, but sometimes, being honest, it'll.
And I would say if you are a real estate agent, I would interview the lender. I welcome the interview. I welcome the questions. I welcome the hard questions. I should be able to answer the guidelines right off. And if they pause, no, I don't know everything because they change on a regular basis, but confidently they say, I do not know that answer, and I'm going to go find that answer. And then they get you that answer, and move in a forward direction. The other part is people pick and choose because they look at the end result, and the end result is a dollar figure. Some lenders do, right? They don't work with manufactured homes. They don't work with tiny homes. They don't work with this or they don't work with that. And we help all. It's not about that. 1 leads to 2, leads to 4, leads to 8. How does one go from nothing 9 years ago, from not having a job, to becoming third in the nation and still closing in a down market? Our whole branch did $50 million, last year. It's because you stay consistent and you continue to provide the same service, and you give. You give, whether that's knowledge, like TJ said, I love that, whether they choose to go against and they don't, it's all for a reason. We have to say that, and hopefully it will come full circle for each person. But if you're newer out there, definitely interview the the lender. How long has that team been in business? What do you do on a regular basis? If they are only doing 1 or 2 loans on a regular basis, well, there's a reason for that. They're new, but they're under somebody that's been doing it 20 years and they've got a great support system around them, right? Or if they're floundering over there, maybe you should be concerned. As a coach and a trainer, which you guys are as well to real estate agents, I do the same with loan officers. And I welcome the folks. I just hired another gentleman who's new to the industry. But guess what? It's not about the industry. It's about all the things he did before, right? The drive, the commitment, the willingness to learn, right? For them to actually pause and slow and study. Who studies, right? We study for a test, but we should be studying our craft every week. Amen. And if that lender is not doing that, like what I do, do I have to? Yes, because I want to be better tomorrow. Tomorrow's a new day, and tomorrow's going to bring lots of new world changes. I mean, we have to be ready. COVID taught us that. This new shift in the market's going to teach us that. There's folks that have been in this business back in 2008. I know you were there. I was there. We talk about the pivot,
98, 88. I got a lot of the
way back. I love it. But, rates have been going down for the last 20 years, if you really think about it, right? And so we're in a new world, but welcome that. Be excited about it, but work with true professionals. Don't waste your time. Every customer that is excited about real estate should be able to purchase real estate within a period of time. And if that lender can't tell you that period of time, then you should get a second opinion. And I welcome all second opinions. Some people think it's difficult to do loans. There's some people that fall down into, these are not difficult loans. They all have 620 plus credit scores. The last family I just helped has 730 credit scores, and we're told no. Wow. I can do that. Just like you can work with your craft, probably with your eyes closed, right? You're a data man, right? And you, all of us are so good at our craft because we study it. Work with those professionals who can be ready at any time. I'm not a football player, but if I was a football player, they would be saying, get on your toes, ready for anything, right? Where's the next move? We have to be like that in our industry. And those that are sitting back, waiting, and not creating more opportunity out there, I don't think will possibly make it.
Well, thank you, Carey Ann, and thank you for being such an asset to this organization. We're really grateful for that. Well, and I learned, like I said, I learn all the time just watching you, because while I'm thinking, okay, I can take a breath right now for a minute, you're saying, okay, look at 2 or 3 or 4 steps ahead. What's the next pivot?
Yeah, I think because I do have a 10-year plan, right? I mean, Aubrey's 9, so I'm still in this business for a period of time, and I'm excited about that. And with that period of time in my mind, there's going to be ups, downs, lefts, rights, all the things. And so if I still want to continue to grow in a market that's telling me you cannot grow, every mortgage company is closing down, you will not grow. I say to myself, my success is not determined by the decision of another, period. I'm not going to decide that I'm not going to be successful just because you said that there are less buyers or my margins are less over here. I'm going to drive, which I did, an hour north, now 2 hours north or 2 hours south. I'm going to go find where people need to be loved on. I'm going to push myself to do things that I've never done. I'm going to stumble over my words and not look very professional at times, right? I'm going to fail forward. And maybe they say life starts after 40, but I don't know. As a 40-year-old plus professional, I'm doing all the things that I'm not scared to do anymore, right? I mean, who cares? The worst thing that anybody could ever say to you is no. And I go, just not yet. Just wait.
And then you say next.
Yeah, and then we'll keep moving forward. But yes, again, love to be interviewed to work on the opportunity to be one of the lenders of choice. I'm very grateful for our partnership and also our friendship with RG. It's been a blessing.
Thank you, Carey.
Thank you so much. And thanks for joining us this week. We welcome you back. You've been listening to The Talk of Music City Real Estate.